Good morning, it's Lane Clark here from Beta 2, Thursday the 2nd of July. Today, very briefly, what I wanted to discuss was a piece of economic data that will be coming out at 1:30 UK time. Now, why do I want to discuss that? Well, very simply, it is probably the largest piece of economic data that comes out on a monthly basis. It is the non-farm payrolls. Now, for those of you who don't know, let me explain briefly what the non-farm payrolls are and why they have such an effect, and more importantly, how we will be approaching them. First and foremost, the non-farm payrolls, very simply, in layman terms, is the employment report in the United States of America. Now, it excludes jobs in the farming sector and other sectors like non-profit organizations, etc. But in reality, it's a very good guide of how the US economy is performing. And as the US markets and the US economy are obviously the markets and economies that people track more closely than others, it's key. Now, it comes out on the first Friday of every trading month. The reason is today being a Thursday is because there's a bank holiday tomorrow in America. So hopefully it won't catch traders unaware. But basically, very simply, what the non-farm payroll does is informs us how the US economy is going in regards to jobs added on the previous month. Now, what's expected is north of 200,000 jobs added in the US economy over the last month. And if that figure does come out, it will be the 15th occasion in 16 months when that exact same large level has came out. Now you have to look at that fundamentally and think, okay, well, if the figures are coming out high and above expectations and above 200,000 for 15 in the last 16 months, then that's obviously good for the US economy. It shows the US economy is turning around, and on the back of that, markets will react. Also, the Federal Reserve have been looking in regards to their interest rate cycle, and it could give them more pressure in regards to moving forward on that quicker than some expect. So I'm not going to go out on a limb and say I expect X amount for the non-farms today. I'm saying what the market sentiment is. What does that mean for the markets? Very simply, I've been in these markets many a year. It's very, very hard to predict what the outcome would be. Sometimes they come in at expectations, but because the markets were expecting it, you see a sell-off. Sometimes they come under expectations, you see a sell-off. Sometimes they come well over expectations, you see a sell-off. Vice versa, we can see markets move in a positive, bullish direction. It can be very much like a small lottery, but ultimately, what we need to do is ensure, from a trading perspective, we manage risk effectively moving into it. So because we can't say with any concrete proof the non-farm payrolls will come out like this and the markets will react like this, what we do, as you know, with technical traders, we build a portfolio with some form of market bias. And then we'll review that bias before obviously the non-farm data comes out. If need be, we'll obviously phase down that bias, and then after the data comes out and the volatility dies down, if technically things look like they should be placed back into the market, then that's exactly what will happen. So, as a critique, that's the non-farm payrolls, that's what the market sentiment is moving into them, and that's how we'll be looking to play them. Stick to the technicals, reduce the bias if the bias is large, and then after the volatility dies down, if technically things still look sound, then consider increasing that bias yet again. Have a good day trading, everyone.